What's up guys, my name is Amir. Welcome back to the channel, man. Today we're going to talk about the change in state of delivery. Now you guys can use it to guide you in the markets and knowing where the market could likely go for the next months or years. So before I start this video guys, I want to give my gratitude for everybody that's liking and being subscribing to the channel. If you guys are not subscribed, make sure you do, and let's not waste no any time. Let's get into the video. So today we're going to talk about the change in state of delivery. Majority of the times it could be the market changing its direction in course, would be the market trading from buy side or sell side. Could be either be from a buy side or sell side. So if I had to make an example, if you look at this low right here, before we saw this growth in this move, I'm going to be focusing on this low in order to get to this point. So I'm going to be using the monthly time frame. This is going to be solely focusing on swing trading. So I'm going to reset my bar right here. So let's imagine the price is right here. It's going to be 2022, and this low, that's going to be our sell side that they're going to be working with. This is going to be our sell side. So this low is going to be our point of interest. So before we want to see any changes in the market, meaning if we want to see the market changing from being priced high, being expensive, to becoming cheap for more buyers to enter and seeing higher prices, we want to see price being driven down, taking out this low and changing its delivery, meaning changing the delivery from being expensive from buy side to making a new low, would be taking out sell side and becoming cheap, so we can enter on a cheaper level and try to engage in long-term buys. So when we see the market move, you guys will see majority of the times when it's bearish, it will only move in one direction. So in order to change that delivery, we want to see a sell side be engaged. So in the monthly time frame, we see this low being swept, and majority of the times when we see this happen, majority of traders get trapped into thinking this is the move that they need to catch, which is not. Because when you go into a weekly time frame, they be looking at the gaps that's being presented, this fair value gaps that's being presented, and think that's the place where they need to enter, and that's where we get stopped out. But if you focus on the monthly time frame, which is going to be a higher time frame narrative, if you guys want to learn the fair value gap patterns, I have a video. I will be linking it in the description or in the top right of how to engage into using the fair value gap pattern that I use. So when we look at this pattern, we see 3 green candles. Just make sure right there we have 3 green candles. So this is going to be my fair value gap pattern. It's going to be my monthly FEG right here. You can see here, this is going to be our state that we're changing in. That means the same candle that surged this sell side liquidity, this will be our candle that we're looking for. And if we take out the high of this candle, we are changing our delivery, meaning the direction that we're going from now won't be bearish anymore. It will become bullish, meaning if I had to take the high of this price and this low, and I have to put on my ranges, let me make it more colorful so you guys can understand what I mean right there. So this is going to be our discount right here, or discount market. This is going to be our premium. So the premium, I'm going to make this red. You guys can see we have our premium market and our discount market. This is going to be a very cheap level, cheap, expensive, and very expensive. And the equilibrium of this whole Fibonacci that I'm using right now, it's going to be my equilibrium, meaning if price is at a very cheap level, and we're going from a very cheap to cheap, we want to see price surging from a cheap level to an expensive and maybe an expensive level, meaning that this highs here will be our next target for the next 2 or 3 years or 5 years, matter of fact. So it's going to be our new buy side, meaning this right here, we have relative equal highs. We have a fair value gap being searched into. I'm just going to delete this. So right here, you can see if we play the price action, we have our monthly FEG. That's going to be the month of, let's move this. It's going to be January 2023. So what I personally do for the first 4 months, I do not trade. I wait for April to come. which means it's going to be 4 months. So with that being said, if you use the change in state of delivery and we use the power of 3 with a yearly candle, which means a yearly candle would have, it's going to be 1, 2, 3 and 4, because we have 12 months. You split it into, we'll make it 3. If you split the yearly candle into three candles, which is the power of 3, we have our accumulation, our manipulation, and our distribution, right? Which means the first 4 months is going to be our accumulation. So what I usually do is going to be January right here. It's going to be the high and low of Jan, right? On a weekly time frame, gonna watch price action. Notice the months, it's March, right? We're taking out the low of January, right? April starts. This is where we want to enter our buys. So when we buy here in April, meaning the next 2 months, it's gonna be April, May, June, July. Those 4 months, I want to be in buys, meaning the change of delivery already started. We did trade into the monthly FEG. We did see the first 3 months of price action, 3, 6, 9, 12, 4, 8, 12, which is January, February, March, April. We have our 4 months. We want to see price have a valid reaction off of this 4 months, which means that the accumulation phase is done. We're now waiting for the manipulation. And you guys look at this, you don't see anything here, right? But remember, I'm on the monthly time, which is here. We already entered there, taking out this low. Buys are going high now. So look how price is surging from that. You see higher prices being offered. Come back into this range, and then we see price going up. Another FEG here, trade into that. Higher prices being offered, and now we are in December almost. Okay, September, October. So this is the current price action. So if you look at the growth that happened from this monthly FEG, if I had to do this, 13% of growth, meaning that the change on delivery already started. So the next few years, we're just going to see continuation. So if I draw out some FEGs right here, over monthly FEG, see we're being traded in. We want to see bullish price action for the next year. So the price, the change in state of delivery already started. So we want to see price going higher. So with that 13% being recoded, if we had to trade from this monthly G, from this low that's being swept right here, and we put our lows by the swing low, so let's make it 1,000 points, and this is our TP. We can make it 2,000 points right here, like this, meaning that if I had to risk 1,000 and the market made this high, we're on 1.58% in profit, meaning that if I had to risk 1,000, $1,500 in profit here by this high. But if I held until here, I'm in $600. But it just shows you that the growth that your money can do over a long period of time. So it meaning that if you have more money to invest, you can treat it as like a stock, and you can surge price or delve into price depending on how much is your stop loss. Because if I had to risk less, like 500, and we made this high, I would be 2.89% up, meaning that if I had to risk $500, I'm up 2.89%. It's almost 3%. That's a lot of money. So I hope you guys find this very inspiring and informative, and I hope to see you guys in the next video. This is one of my first videos for 2025, and I hope you guys like and subscribe, and I'll see you guys in the next one. Peace.